Alrighty, happy Sunday, everyone. Let me get a audio check. Hopefully the internet is good where I'm at. Appreciate you guys' patience here. All right, guys, everything should be going good. Hopefully we'll have a smooth recording here today. I am back in the U.S. for a few days in Florida right now. So happy Sunday to you guys. Before we get into this one, please do hit the like button. I did get out of the pool for this one, so I'd appreciate if you guys could hit the like button on your way in, and if you get some value here in this one. So let's go and get into what we're looking for here today. I want to keep this one short, sweet, get to what I'm looking for. Maybe take a few questions at the end to let you guys know what opportunities I'm weighing out in dollar, bonds, and stock index futures. Any other questions you guys may have, more than happy to take a few of those here as well. So absolutely everything delivering perfectly in line with our expectations last week. And we'll go ahead and start with the US dollar. So again, before we look forward, let's go ahead and look back. Last week, we called higher prices into this weekly fair value gap. Here I can get that level put on there. So weekly imbalance was the draw last week. So we saw a bullish expansion, open low, high close into that weekly gap. So just perfect price delivery there last week in line with what we were looking for. So now going forward, I will be looking for this weekly imbalance, see how we trade at these levels. And that'll give me a great deal of insight going forward with what I'm looking for. Cleo, happy Sunday. Thanks for being with us. Glad to be here with you guys. Absolutely. Silver Bullet Trader, Frank, Amy, hello, hello. Glad to have you guys here. Miha, hey, how are you doing? Doing all right. Doing good. Having a great weekend. Enjoying time with family. So life is good. Life is good. Jeff, good afternoon. Thank you, sir. Nikki, hello, hello. Cleo, appreciate your time. Appreciate you guys joining us. Kevin, happy Sunday. Happy Sunday to you, my man. Big bro. Hey, Sal, hope you're doing good, my man. All right, guys. So as I was saying, weekly fair value gap, we're going to have to see how we trade there going forward, and that's going to give me a great deal of insight. So far, the market has been bearish, so I have not been trying to call a bottom. However, even in bearish markets, even like we saw in this week here, right, there are going to be short-term retracements, even in long-term bearish trends, right? That's what we saw here this week on this repricing higher and this previous retracement here as well. So again, how we trade inside that weekly fair value gap is going to give us a great deal of insight, rather. Working down into the daily chart here, two levels that we were looking at last week. This buy side here, which is also the high of that weekly, or sorry, the low of that weekly fair value gap, which is also this swing high here on the daily chart. Sorry. We're watching this down close candle here. That's a bullish order block. You'll notice I don't have it labeled this week. That's because this propulsion block will take the place of institutional support. So last week we were watching this bullish order block, wanted to see if this could act as support. It did, and that took us into the buy side. So pretty straightforward read if you guys were dialed in, taking notes here last week. So into that bullish order block, then we see a nice repricing higher into that swing high. I'm going to take this bullish order block off, and now my focus is on this candle here. This is the propulsion block. So because this is an order block, this down close candle traded into it. Now this candle here will take the place of institutional support. So we drop down into this down close candle, hit this fair value gap, and now we're seeing strength to the upside. So what my attention goes to right now is the obvious dealing range here on the daily time frame. Let me take off the quadrants, and we don't need to extend that all the way to the right. So looking at equilibrium here of this price range and also that daily fair value gap there. So as long as we remain above this propulsion block here and that remains support, my attention goes to this daily fair value gap here. And then through that, we have equilibrium price point, which overlaps perfectly with consequent encroachment. So really nice nesting of a couple key levels there. So the draw is bullish as long as we remain above this level. What changes this is if we lose this down close candle. If we lose this down close candle, then I'm going to go back up to that weekly time frame, assuming we're going to be continuing the downward trajectory. And then I'll simply get in line with what the market's giving us. But as of right now, this is what I'm looking at in the market structure, the order flow, which is higher prices. Working down into the hourly chart here, we have that gray rectangle there, which is that bullish propulsion candle. We have the buy side last week, which I took your attention to because these highs here, again, just too clean, right? So it's reasonable for the market to want to trade up into those levels. What my attention is on now is this high here, how it's relatively equal to this one. We drop down into that daily order block and look at that reaction from that on the hourly time frame. So looking for continuation into these equal highs here, and potentially into that blue rectangle above, which is that daily fair value gap. So again, blending things top down, hourly, daily, or sorry, weekly, daily, all the way down to the hourly chart. So you guys know what that means for foreign currency. Don't even need to really go into euro or pound since I already covered what I'm looking for with the US dollar. So again, bond market, we have been in a higher time frame consolidation, looking at that weekly chart, just zooming out. So that's why last week I gave you guys a very surgical target that we'd look for. And that takes me to the daily chart, to that daily fair value gap here. You guys remember, because we're in that higher time frame weekly consolidation, as you just saw, I can't give you targets that are huge runs on a weekly and a monthly chart because it's just not going anywhere. So what I have to resort to is surgical strikes, right? Just quick price runs where the market's going to refer to specific algorithmic reference points. So what that was for us last week was the daily fair value gap here, this inefficiency here. We were looking for that as a draw on liquidity. We traded up into that, and then the market gave feedback that it was bearish looking at the market structure. That gap was also important because, again, as I covered last week, we have the range high, range low. This gap here is just above equilibrium in a premium market. So that's a really easy draw to see that when you already have bullish market structure. So we opened up here on Monday, and then Monday, Tuesday, Wednesday, Thursday, just grinding higher into the targets that I gave you guys. So even though the weekly is in a higher time frame consolidation, it's going to be a little more difficult, not impossible. If you know what you're looking for, if you can manage your expectations and just look for low-hanging fruit targets, it's still not that hard to sort out price action, even in a consolidation. Again, as long as you know how to keep those expectations managed. All right, so daily time frame, we reached that gap. Now what? So we traded all the way up into a premium market. Again, that's why it's always helpful to kind of look back, see what the previous week did, and that's going to give us a great deal of insight as to what we're looking at going forward. So we saw that daily fair value gap traded into, and then we see how does the market trade there. Now working down into the hourly chart, what did we see from that daily fair value gap? A 3 drives pattern, 1, 2, 3. A displacement lower. I think we can all agree that's a displacement through a swing low. So that's a breaking of market structure after a run on stops. So whenever I tell you guys, hey, I need to see how we trade at this level, I can only see, right? Like last week, the only easy price run starting on Sunday here where we opened was just this easy run into that daily fair value gap, right? Easiest day to see that, clear bullish order flow, clear bullish market structure, and we had that fair value gap in a premium of that range. Then once we get to that level though, I need to see what are the market makers going to do with it. And it's very easy to read into what they're doing if you just have a basic understanding of price action. So what do we see here? They took the market higher above these buy stops here. And then we get what? An aggressive repricing lower through that swing low. So huge displacement away from this high. That's signaling what? A shift in market structure. After a run on stops, creating this huge displacement, leaving that range there. So now that gives us what? Insight that the market is bearish. So going back up to the daily chart so I can give you guys my targets for this week. We rejected that daily gap. So as long as we remain bearish, looking for this low here. Let's make that red since that's sell side. So through that low there, my attention goes to this low down here. So that could be setting up a really nice swing trade in the bond market. So something to watch out for here this coming week. Yeah, bonds look really good for a flush to the downside. So that's what I'll be expecting, and may take some action on that if the model that I'm looking for presents there with some inversion fair value gap. That'll break down, that I could look to get a real nice low risk entry. But I'll touch on that next week if and when that forms, so you guys know the targets, what opportunities I'm looking for this week. Now, finally, going over to index futures. Let's take it from the monthly chart here, review a couple things. Dylan, why were you bullish last week? And this is something I want to go ahead and take a little bit of time to cover, let you guys see behind the scenes a little bit as to what allows me to see what it is that I'm looking for. But before I even go down into the monthly, the weekly, the daily, and we get down into the business here, I want to go into an important lesson of top-down analysis and higher time frame bias, why it's so important. I want you to take some time this week. If you guys traded last week, study your winning trades and study your losing trades. Look at this weekly candlestick here. Perfect open low, high close, expanding to the targets I'm giving you guys. So the bias is already given. You guys know this thing is bullish. If you look at your losing trades from last week, and this might not be true for all of you, but for the majority of you, it will be shorts. Why would it make sense that I can already assume the losing trades you guys are taking are going to be shorts? Because I've been there, right? I used to trade with no higher time frame bias. I had no idea what these candlesticks were doing. And then I would just take trades up and down, getting lost in 1 minute and 5 minute candles. Probably sounds a lot like your guys trading right now. And I've been there before. What helps you get to the other side is looking at these things here. So what do we see on that weekly candlestick last week? Bullishness, strength. So what you'll notice is the setups you probably lost on last week were probably going short, except on Monday. Monday was a bearish bias because of what setup. I uploaded that YouTube video so you guys know why I was, why myself and the team were looking for lower prices on Monday. Outside of that though, just about every single trading day was bullish. So if you focus your intraday setups, your 1 minute, your 5 minute, your 15-minute setups in line with that weekly candlestick, the probabilities of your trades are going to go through the roof. So now you guys see why, for those of you guys that I'm coaching in mentorship, right? Why do we look to frame our highest leverage setups in line with that weekly candlestick? And why do we dial back risk when we're trading against that weekly candlestick? Because we want to trade in line with the higher time frame institutional order flow, right? And that's going to be derived from the monthly, the weekly, and the daily chart. So it's not to say you can't go short. It's just to say if you look at your trades, you guys are probably going to be astonished as to where those losers are happening and how you can avoid them. Because now if you do pre-market analysis, you know the daily chart, the weekly chart is bullish. Well, then why the hell are we going short with crazy amounts of leverage, right? So just something to help you guys out, help you frame your setups in high probability. And that's going to come again from the weekly, the monthly, and the daily chart, right? That's why we're here doing this on Sunday, showing you guys how a professional gets prepared and how you guys can start thinking in a more professional way, having routines, preparing, and knowing what you're looking for, right? All right, so let's take it from the monthly chart. Just wanted to share that in there because I know before I knew bias on the higher time frame, man, I was just getting smoked trading 1 minute patterns all day, and man, that's no fun, right? All right, so let's go ahead and break it down here. We have the dealing range on the monthly chart. Why were we bullish last week? Why am I still bullish? Market dropped down into equilibrium, right? 50%. Then we saw what a nice rejection displacement to the upside. So we had these relatively equal lows, sell stops taken. And now we see strength on that monthly chart, trading into that monthly fair value gap. If we're going to be bullish and continue looking for higher prices, then my attention is going to go to the external range liquidity here, looking for all-time highs if we get through that monthly fair value gap. All right, weekly chart, zooming in here. Market dropped down again, took out the sell stops here, and then we got a nice rejection to the upside. So that then allowed us to expect higher prices on the weekly chart based off how the market took out sell stops here. Smart money going long. Now they're going to want to distribute those long positions to what? The swing highs on the run lower. Why is that? Because if we look at the daily chart here, and you look at the swing high here, the swing highs here, and then the swing highs here that we're about to trade into going into next week, what resides there? Fund level stops. You may not trade like this, right? You may not have a buy stop there or know anyone who does trade like that, but funds are trading long-term trend continuation models, and they're going to have stop losses above these levels here. So why am I able to give you those targets here? Because the algorithm is going to seek the fund level liquidity, and that's going to be on these daily highs here, here, and then all these targets beautifully delivered last week. So going back up to the weekly chart here, the weekly bias for me is bullish. I'm looking for this swing high here. Through that swing high, then I like this weekly fair value gap here. I want to see if they can take it into that. Then how and when we trade here will give me insight as to whether or not they want to clean up these equal highs here, which just as of right now, that's what I'm looking for. But again, I'll have to see how we take it week by week, candle by candle. But long-term perspective, I am looking for these highs here. All right, daily chart. So we qualified this as a breakaway gap last week. Why is that? Well, because everyone knows gaps like to get filled, right? Not all gaps though. If I'm bullish, I actually don't want to see gaps filled. 1 second here. Let me shut these notifications off. All right. So as I was saying, we actually don't want to see all gaps get filled, right? What do you mean? Well, Dylan, I thought the market likes to seek inefficiencies, right? You always say it moves to two things, liquidity and efficiency. Yes. But if I'm bullish and the present narrative is looking for higher prices, which again, we covered all that last week, we don't want to see gaps below market price filled in. Why? Because then we can treat that as a breakaway gap, signaling that the market is strong. And I think we can all agree last week we saw some strong price action. So when I'm trading, when I'm going live, when I'm walking the market like a dog on a tight leash, it's understanding the higher time frame, right? The precision in me calling the market on 1 minute, 5 minute, 15-minute charts, again, it doesn't come from those time frames. It comes from the top-down perspective of where's the higher time frame going, then looking for lower time frame narratives, understanding that higher time frame premise. So why is that a breakaway gap? Sure, you guys are wondering. If this is where the price run's starting, and this is where I think we're going to go, let me flip that so you guys can see what I'm referring to here. So here's 0.3 or 30% of the price run here. If I'm expecting this to be the beginning of the run, this is where I think we're going. I want to see at 25 to 30% an imbalance left open. I can treat that as a breakaway gap. Again, breakaway gaps aren't just fair value gaps either. they can come in the form of any gap, liquidity void, volume imbalances. It doesn't have to be a fair value gap that's a breakaway gap. So this is an imbalance here that was left open. I'm treating that as a breakaway gap. Why? Because we're expecting the market to draw higher. We saw that last week, and I'm still looking for higher prices. I want to see at 50% of the anticipated price run a consolidation. So I want to see a breakaway gap at 25 to 30%. I want to see a consolidation here at 50% of the price run, and then continuation higher. So this gap here, extending that through, that became an inversion fair value gap on Wednesday, stayed in the upper half. That's what we want to see. And then a nice repricing into the targets I gave you guys last week, which was the midpoint of this wick here. Why the midpoint of that wick? Because if I'm expecting this high for the market to reprice into that fund level liquidity, then what's the low-hanging fruit just below that? The 50% of that wick. So through the wick, we had the buy side. Through the buy side here, the attention was on this daily fair value gap there. Look at that beautiful delivery last week. So that's why on Friday, again, we're looking for higher prices, right? No TGIF when the market's bullish. You're going to get smoked trying to go short in a bullish market. So daily fair value gap, nicely delivered. So now I want to see us trade to and through that. So let me get that level back on there. I want to see that become an inversion fair value gap like what we saw here. Get above it, close above it, support, reach higher. Want to see the same thing here inside that little range right there. So targets on the daily chart are going to be the high here. And this is not a swing high on the daily chart, but you can see how these highs here are smooth. If we drop down, it's like an hourly or 4-hour chart, you'll see these highs are relatively equal. So that's why I'm labeling that there. It's not because it's actual high on the daily chart. This high is, yes, but this is a smooth high that I can see is going to be on the 4-hour, 1-hour chart. So there's still going to be a good amount of liquidity here. So those are the upside targets ahead of that weekly fair value gap. And then through that, I am interested in these highs all the way up here. Yeah, I'll go ahead and share this. All right, so going back to the implied dealing range concept, a lot of things you can do with it. You can anticipate breakaway gaps as I covered here, but let me show you guys something here at 50% of the anticipated price run that's pretty cool. So let's drop down to the hourly chart. Consolidations happen at 50% of the expected price run, right? So you can see equilibrium here, right? I'm not just pulling this out of my ass. This is the beginning of the run. This is where I think it's going. So dropping down to the hourly chart. And this is a little bit more technical science level stuff. You don't need all this to find profitability, but if you guys want to be a monster, then yeah, you can start implementing these things into your analysis. But if maybe you haven't studied ICT that long, or maybe it's like, all right, Dylan, this is way going over my head. You don't need this to make money. This is just freak level precision, and it'll get you close to the stuff that I'm doing, right? But you don't need all that to make money. Do keep that in mind. So we have a consolidation here. Why would we expect that? Because that's at 50% here of that anticipated price run. So we see a consolidation here and then the run lower, which clears out these stops. That allows smart money to go long below equilibrium, below 50%, and buying these sell stops here. That then prices at a long-term low. And that's why on Friday, it was just the easy read for higher prices because we have another long-term low here, intermediate term low here, intermediate term low here. Between two intermediate term lows is going to be a long-term low. So everything pointing higher in the market structure, order flow, and just a really clean delivery last week. So as long as we don't break this low here, we're looking for higher prices on the hourly chart into these buy-side liquidity pools here. Other thing I want to take your attention to, these are the liquidity pools here on the daily chart. What I will be looking for going into Monday could be a potential TGIF on Monday, drop down, and then continuation. That's what I'll be looking for. I'll have to see, of course, the market structure, the order flow, how things are set up, but it would be reasonable to see a retracement to the previous week's TGIF, accumulate, and then continue trading higher. Again, do keep in mind the bias is bullish, right? So I'm not saying full margin short all your equity on Monday morning's opening either, right? I'm just saying that's something I'm potentially looking for because if I don't see TGIF on the Friday, then generally we can look for it on Monday of the following week. But again, keep in mind, top down, the market is still bullish. So even if I am going short, you guys should have parameters for trading against the higher time frame weekly order flow. So that's the business there, looking for higher prices into those daily levels on the hourly chart. And again, these are all key swing lows, so we wouldn't want to see these violated for market structure to remain bullish. So with that in mind, that's all I had here for today, I believe. Yep, good with that. All right, let me see if there's any questions here, and then we will go ahead and keep it moving. Nalab, happy Sunday. Thank you very much. Juju, Dylan, trying hard to speak like ICT. Man, you don't got to try hard when you've been locked in with ICT for years, my man. You don't got to try hard. Amy, can you provide insights for oil Gold and silver. Thanks. Yeah, absolutely. Yeah, let's go and do that. Alrighty. All right. So daily chart for crude oil last week. So we saw a retracement into the weekly fair value gap here, right? And then we started seeing weakness from that, leaving some of that open. So nothing bullish in crude oil. I was wanting to see on the daily chart after we created this swing low here, could we displace higher through that gap? And then the market couldn't, right? So we see daily fair value gap here. Market traded up into it, took out the stops, broke down, rejected. So as of right now, crude oil looks weak. I don't think it will be going much lower from here, but as of right now, it is in a sell program. So as long as you remain below that fair value gap here, order flow should remain bearish. And then the attention will be on the sell side here, as long as you remain below that fair value gap there. So that's the bias for crude. Zooming out to the monthly chart, yeah, everything looks pretty bearish for crude oil. So yeah, my focus is going to be on the sell side here at the 55.12s. Man, crude oil getting demolished. All right, and then the other question was gold and silver. Yeah, let's take a look at gold and silver here. Alrighty, so gold again still at all-time highs. Well, not this past week, but have been. So we're seeing a retracement on gold into that weekly fair value gap. This down close candle. That's what I'll be watching on gold. Oh yeah, I remember us touching on this that last week, right? So we got a dealing range here on gold, looking from this range low, range high. We've dropped down into a discount market. I think we did touch on that last week. I remember looking at the what was it? Yeah, remember looking at this 4-hour gap here. We touched on that last week. As long as we remain below that gap, we trade into a discount. So we did get that delivered last week. So what I'd be watching here on gold is how we trade in discount here. I'm not trying to call a top again on a market like gold that's at all-time highs and just keeps reaching higher. So I would be looking for higher prices on gold from this discount market here. But again, have the confirmations that you're looking for, right? Know what you'd look for in a market reversal profile. And then you could look to frame that here from the discount of the range here on gold. That's what I'd be looking for. If we displace lower and lose this breaker here, then that could potentially signal we're in a longer term sell-off. But as of right now, because gold's at all-time highs, I don't see lower prices for gold in the short term. And then lastly, silver. Let's see. Yeah, silver's getting hit pretty good. So up close candle here for silver. Want to watch that. If we remain below that up close candle, that would act as a bearish order block, and that would not be bullish for silver. Daily chart, we did get a nice rejection from the breaker here. So again, every higher time frame order block is going to be a lower time frame breaker, right? So up close candle here on the weekly chart. That's going to be a breaker on the daily. We traded up into that breaker, ran the stops, broke down. Says right now, silver looks weak to me. I would focus on the sell side here for silver. Yeah, so below that low here, we have this buy side imbalance, sell side inefficiency here as a draw. And then that's all I can see for silver. Silver's been such an ugly market. If you look at this weekly chart here, man, I wouldn't touch this with the 10-foot pole. Looking at the silver market. So these markets here, like when you see this type of shitty price action like this on a weekly chart, these markets are a lot harder to call. It's a lot harder to see precision elements in a market like this compared to something easy like NASDAQ, right? Super easy to read a market like NASDAQ, right? Market like S&P, easy money. And then a market like silver is just total shit. So for trading, I don't like this market. For long-term investing, I think precious metals are a good place to be as an investor. Gugu, was that a question or just saying that? Alrighty. Please check Bitcoin. Yeah, let's do that. Yeah, let's take a look at Bitcoin. Yeah, so Bitcoin's looking bullish. Look, going all the way up to the monthly chart here. We have range low, range high. Market trading to a discount. Nice reaction from discount market. Dropping down to a weekly chart, we see the same thing. Range low, range high, discount market. We see a 3 drives pattern in a discount. And then a nice displacement to the upside. So everything on Bitcoin right now is looking bullish. Last week, for those of you guys, I think my man Jonathan in the Discord was asking about higher prices. So we nailed that to the wall. Looking at this fair value gap here for BTC, traded into it, institutional order flow intraday, and then the market's ripping higher. So what I'd watch now on Bitcoin is this fair value gap, this down close candle. And if we're going to remain bullish, then we'd want to see Ideally, these down close candles act as support, but given how you see 1, 2, 3, see how these lows here are just super smooth. Let's go down to the hourly chart. You'll be able to see that a little clearer. These lows here, just really clean. So even if they're going to take it higher long term, in my mind, it would still be reasonable to see them want to come take out these lows just because of how smooth that is there. So that's what I'm looking at on BTC. But higher time frame for investors, for those of you guys that are hodling, as they say, you're probably not too worried about what the daily and the hourly chart is doing for Bitcoin anyway. So what I would be watching is higher time frame. Yeah, so we're about to close this weekly candlestick here, which will mean this will be a fair value gap here. So for Bitcoin, for us to remain bullish long term, I have to see us hold that fair value gap there. And that's what you want to see. So for long term crypto bulls, we drop them to a discount, the redrives pattern in a discount, and then we reject it to the upside, displacing above the swing high. So as long as you remain above that fair value gap there, that will be bullish for BTC. Eslam, what is your trading program in FOMC weeks? I believe you're asking like about my process. It's not like NFP week. For me, NFP week is a lot bigger of a deal personally for me in my experience. So because of the economic calendar this week, there's high impact news Monday, I believe, and Wednesday. I believe those are the only 2 days. So I will be trading on, just if you guys want to know the days I'm going to be trading, I'll be trading Monday morning. I will be getting after it, looking for setups. Tuesday I will be flying, so I will not be doing anything on Tuesday, and it's also the day before NFP, the day before FOMC. So probably not going to be doing much Tuesday. Probably not going to be doing anything on Wednesday either because it's FOMC. Can you trade FOMC after? Absolutely. I don't really like it that much, so I will be probably trading Monday, Thursday, Friday. So that'll be my trading schedule for the week, just in case you guys wanted to know. Abraham, happy Sunday, Dylan. Yeah, to you as well, Abraham. Appreciate you joining. Sextile, I saw you in ICT's Twitter space. How did you feel about what he was saying? Oh, yeah. This stuff's been going on for years. If you know anything about the World Economic Forum, if you know anything about the central banks, fiat currency, how the world works, then you would have seen the writing on the walls with what's happening right now for years. So nothing new. I've personally have known this since I was like 17, 18 years old about what's going on around the world, how the people that truly control the world, you know, what it is that they're doing, and things are just ramping up right now, right? And if you don't know what I'm talking about, a good place to start is look up the Great Reset, look up the World Economic Forum, look up the Bilderberg Group, and hopefully they don't delete this off of YouTube for answering these questions. But if you guys are interested in that, look at that, and that'll clear it up pretty quick. And then you guys will see that the conspiracy guys were just a little bit ahead of the curve. So that's what I feel about ICT. He's a very smart man, and I've been on the same page with him for quite a while now. So nothing new, not a surprise. And that's why it's important to lock the fuck in with trading, right? Things are changing. Things are getting very expensive. Jobs are getting farther and fewer in between. And that's not going to change. And I'm not here to, you know, spread fear porn or make anyone scared, but everything's going to get more expensive. There's going to be less jobs. So that means what? You've got to get your shit together with trading. You've got to learn what you're doing, level up in the skill set, because trading absolutely outpaces inflation, but you got to know what you're doing. So that's my take on it. I don't really focus on things that I don't control. What I do control is how much I make, my business, how good I am at trading, and the lives I'm impacting through everything I'm doing here. That's the things I can control. I focus on that. Everything else, I don't really care too much about because I can't do anything about it. Nalab, could you please make it clear about Monday TGF? Yeah, some clarifications about that. Yeah, so generally, what do we look for on Thursday, Friday, once we've seen a one-sided expansion, either higher or lower? We look for the opposing end of that wick, for the extreme end of the range to get created on the weekly candle, right? Generally, the timing at which we look for that is Thursday, Friday of the week that we're looking at. However, if we don't see that retracement Thursday going into Friday, many times Monday is the day we'll see that TGIF retracement back into the range. So that's what I was getting at there. Yeah, great question, Hadid. Soup, you just taught me how to spot long-term lows. I knew conceptually what they were, but was always confused. Thanks, man. Absolutely. Yeah. So market structure is extremely helpful because what you'll start noticing, Soup, is if you start looking at your intermediate term lows, your long-term lows, that's where the explosive price runs are happening. So if you can identify, okay, we're bullish and we're expecting this to be an intermediate term low on the hourly chart. Imagine what an edge you have compared to retail Rick, who's in there gambling on 1 minute candles, chasing everything after 9:30, right? Huge difference, night and day difference in what we're doing and what other traders are doing. So absolutely, being able to spot market structure just puts you on a whole nother level compared to other traders. And for those of you guys that are working with me directly, institutional market structure is something we'll cover in great detail, but you guys are getting introduced to that stuff here. Yeah, glad you were able to take that from that short teaching though, Soup. Good stuff. Can you check my question on Discord? Yeah, let me see what we got on the Discord here. Let's see if I can pull this up without... Oh, so yeah, so you guys looked at the schedule. Is there any availability for the action plan calls this week? Yeah, no, so the team is all booked. Yeah, so the schedule's all booked. So no, this week I don't think we'll have any more openings. Schedule's all booked up. I think the next openings we'll have is the following week. I think my team just let me know before the call that all those have been booked up. And it's been great talking to you guys, by the way. Glad to see that that those of you guys that are locked in, taking this serious, right? You just need the structure and the guidance needed to actually allow you to take it serious. And it's been my absolute pleasure speaking with you guys. So yeah, all booked up for this week, just to be clear, and then we'll probably open up spots going into the next week, depending on what my schedule's what my schedule's looking like. But like I said, it has been great speaking with you guys. All right, so that's it for the Discord. All right, all good. Let me see if there's any other questions here before we get going. Aussie dollar, euro dollar. I'll look at one of them. I'll look at one of them because I already looked at dollar. Euro is just going to be the inverse of that. So let me look at the Australian dollar here. Yeah, so I'd look for bullishness on the monthly into this. Really bad market structure here. Let me go to the weekly chart, see if it's a little clear. All right, so for Australian dollar, I was going to say equilibrium would be an easy draw, but that's already been delivered. So let me see. So yeah, what I'd watch here for Australian dollar, we just reached into a short-term premium from this range high, range low. So we reached short-term premium. I'd watch how we trade here, right? So we just took out buy stops in a premium market, and now we're trading into this breaker here. So high, higher, high. So we have a breaker, and we're in a premium. I'd watch how we trade there for the Australian dollar, and then keep a close eye on dollar as well, right? So dollar is going to give you a great deal of insight as to what we're likely to see for these other markets as well. So keep an eye on that. Let's refine this down to the daily chart here. All right, so far we have a bullish breaker here, low, lower, low. Market's finding support in there. That's bullish. So as long as we remain above that breaker, as long as we don't lose that level, the attention is on this buy side here. Well, we already basically tagged that. So these are equal highs, so we'd want to see that. And then this high here. And then these, and then this high up here. So that's what I'd be looking for in Australian dollar, as long as you remain above the breaker, right? That gives enough for a price run to frame. And then if we remain really bullish, then we can trade to it and through it, and then look for even further levels above market price. Eslam, thanks, Dylan. Yeah, my pleasure, man. Abraham, did you understand what he said? 11 a.m. That's hard to understand. Abraham, did you understand what he said about the equal highs or equal lows as a draw after? So if you're talking about what he said, I'm assuming you're referring to ICT Twitter space. I did not listen to the entire space. I was traveling, so in between in and out of the airport, I popped them on for a little bit. But I didn't listen to the whole thing. Abraham, if there's a specific question you have, though, drop that into the Discord, my man, with a chart, if you have one. And then I'll be able to sort that question out for you tomorrow morning when we're live for live trading, my man. Yeah, I'll probably take some time to go and take a look at what he was saying. And then from there, I'll hopefully be able to fill you in. Joe, well said about the world economic outlook. Yeah, interesting times, Joe. Interesting times we're in, my man. Hadid, thanks, Dylan. Yeah, my pleasure. Look forward to the chance to speak. Yeah, looking forward to it as well, Cleo. Absolutely. Nikki, thanks, Dylan. Glad to be here. Thank you. Make sure you like the stream, guys. Absolutely. If you guys found some value here, if this one was insightful, please do hit the like button for us. Much insightful. Stay safe and profitable. Appreciate you, Hadid. Great speaking with you guys. All right, folks. Well, that's it here for today. I'm going to get back to enjoying this beautiful Florida sun that we got here. And with that in mind, I want you guys to have a great rest of your weekend. Stay safe. I will see you guys on the next one. Take care, everyone. Bye, guys.